focus on the lesson. Live in the hills, but it still get a spread. Started with a live, but it still reinvest it. Fear how I feel, then you feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but the sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, ladies and gentlemen, I hope you had a wonderful day. We had Jerome Powell, and it was insane. The NASDAQ went up 4%, and we have to talk about it because it really goes hand in hand with what we've been covering all this week. But now you have a very big data set tomorrow with the GDP, and I thought I would start this video by triggering some people. So here it is, hot take. Tomorrow's GDP print. I could be wrong. I've been wrong in my life. You probably care about it more than I do, but it's going to come in positive tomorrow. You are not going to see a negative GDP tomorrow. Now, I'm kind of going off a little bit of what Powell said, but there was an update by Goldman Sachs as well, and they actually said the same thing, but it's a hot take, and I believe it, so we will see. And now why I'm bringing this up first, because now, after Jerome Powell, depending on how that data hits, we actually might see a real rally, or we're going to enter into the volatility a lot quicker. So we got a lot to talk about. I'm going to go over what happened with Powell, the basic rundown, why it was bullish, and what to look for now as we move forward. A couple of other things that happened today, and then the plays that we made, and the plays for the rest of the week. So chop your thumbs up on the video. Make sure you're subscribed. And if you don't know, we are live Monday through Friday, 30 minutes before open. YouTube.com/The Stock Market. We'll see you there. It's free 99. And do you notice? I got a new mic cover, man. This thing is crazy. Look how skinny it. I feel like this is how I'm going to look once I cut my hair. Because I got, I ain't going to cut it. And like, this is, you guys want to see the old one? I know it's nasty, but you see it, that's nasty to you. But I see that as hard work and dedication. So I don't know. That's on you, but he's retired now. Sad day. If any of you want this, let me know. I'll send it your way. I don't know if you're into that. Maybe this just got weird. Okay, go. Anyways, right off the bat, let's talk about the keys. Let's talk about Powell. Literally everything that we brought up the last couple, even from the beginning of the week. Remember, I was feeling a little bullish. I calmed it down coming into yesterday, but now everything we talked about, the two main points, those were the real drivers today. So if there's anything, here's the rundown, or here is the difference between what we got at the last meeting, and you'll notice there wasn't a lot of changes. They struck out the first line. We're going to talk about that, but that was the first change. They changed things about invasion, the war, the amount that they raised, and then at the bottom, instead of having somebody dissenting, you had nobody dissenting, so they got rid of all of that from last month. Pretty much, it was exactly the same. There was nothing really new, but now the talking points in those main factors, this is what really moved things. So the first thing, and this is where you got the big move on the upside, this was one of the most bullish things about today. It is a quote from Powell. He said, "It is likely that it will be appropriate to slow increases at some point, and unusually large rate hikes, they would be data dependent." So this was in relation to September. He even said it flat out. He said, "We're not going to give any guidance." He said, "I don't want to give guidance." We actually had it up on screen. Scott Minierd of Guggenheim, the CIO, he even said it's that we should get rid of forward guidance. It was born in hell. I was like, that's a good way to look at it. But Powell said no guidance, and then everybody kind of ignored what he said, because at first he was like, well, yeah, we could have unusually high rates. He's saying that pretty much he kept 100 basis points, 75. He kept all of it on the table, but it's like the market just like ignored everything. And then right when they got that phrase that just showed 1 ounce of him saying that he would actually slow down, that's it. Everything went crazy, and that was very bullish. So that was the first part. But now number two, this is something you got to realize. It was very big that occurred during all of today. The Fed futures and rate hike expectations, those actually just changed dramatically. So if you go look at the September rate hike odds, they were at like near 30 yesterday. They dropped down near 10 today after the report. But right when he said that, and right as people interpreted this, they were like, nah, hold up here. We got to change some things. Even the yield curve, it opened up negative 30 on the 2s and 10s, and then it came back up to negative 18 by the end of the day. That is huge yield curve steepening, which is actually bullish. Again, the opposite of inversion would be steepening, and that is traditionally bullish, but that's what we started to see right when people started digesting this. And then I think it was the 5-year, 30-year, that actually went from inverted to uninverted. So the 2s and 10s still important, but again, as people were digesting this, he gave a sliver of hope in there. It really started to change things. And part of that was also because Powell said he expects rates to be around like 3%, 3.25% by end of the year, when the market was kind of at like 3.5%, a little bit higher. So that one was very interesting. That was number 2. And then finally, the economic conditions we brought up yesterday, that was actually their first change. So like literally that first line, they got rid of it, and just right off the bat, they acknowledged some of the data and the softening. And that is good because it shows that they're aware of it. Powell even touched on it a little bit, but then he banked on the jobs market again. Now this one is interesting because literally, if you haven't been watching Powell, this is his excuse why there's no recession. This is what he says when he's like, okay, well, why are we able to raise like this? He's like, well, the jobs market is strong. Pretty much, as long as the job market is strong, it gives Powell, or it kind of just gives you his runway that he's probably going to keep raising rates. So they changed the conditions. They acknowledged them. They brought up the war. They took out China. But then at the end of the day, they were saying the jobs market is still strong, and that is where a lot of their future actions are going to be pinned upon. So that's the quick rundown. Again, there was a lot to digest, but like I'm saying now, here's the next key. If there is a positive GDP tomorrow, if there is good earnings out of Apple and Amazon and everybody else, there is just really not a lot of things saying, yeah, we need to go back to 372, we need to go lower. Has the move been fast? Yes, but take a look at the daily. This is actually a better rally forming than what we got last time, where it popped up and did that in 3 days and then came right back down. So I have been leaning bullish for the beginning of the week, but the way I'm seeing this, if none of the data is as worse as expected, again, even Facebook still found a way to stay up, even though Facebook was bad earnings and they guided lower. If the earnings come in good, and then that GDP tomorrow, if people get caught off guard and it ends up being positive, there's just going to be a lot of things kind of looking like, well, what has to get worse? But that's the final part now, because what he said today, it increased all of the impacts we're going to get from data. And finally, you're going to get the Friday jobs number, PCE on Friday, and consumer sentiment. And all of those things are just going to have a way bigger weight. Essentially, even though I'm talking some bullishness, and if things go good, it could be bullish, what I'm trying to say is that you have an open door to be a bull up until the next data set comes in and knocks everything off. And now it's not going to be as sensitive responding to everything. Again, even tomorrow, nobody reacts to GDP, bro. This is the most anticipated GDP in decades. But point I'm trying to say is it will open a door to the market to do whatever it wants until there's a bad CPI, until there's a bad PCE, or until there's a bad earnings, and people are like, okay, we finally have real data and not a real fear, but the actual data showing a decline, then that will probably change the trajectory and bring back some of the volatility. But we'll see what happens. Good luck for tomorrow. We're going to find out, but let us get into the plays. So right off the bat, there was a couple of different plays. So one, there was a lot of earnings. Meta, I don't know how they're still up. It looked, even though they dropped from the top, but we'll see tomorrow. But they guided down big. The only positive thing was that they said they're going to cut some of their spending by a pretty large amount. So that kind of was good, but there was that. Qualcomm did bad. Teladoc did awful. They guided down even lower. The Teladoc was absolutely ugly. So watch ARK tomorrow. And then there's a couple of news pieces throughout the day with like Visa and MasterCard. There was a very big bill, it was a bipartisan bill with senators, and they're trying to go after Visa and MasterCard for credit card fees. So there was a couple of moves, a lot of those things happening. So keep all that in mind, and just remember, we still got more earnings and the Powell follow-up. That's what you got to be careful for, because now after the 3 rate hikes that are 75 basis points, every time we've moved up anywhere from 1% to 4% today, but usually the next day it came down. So keep that in mind, and let's see. But as far as the first play, Meta, baby. So I think the follow-up should be pretty big, considering that you have the follow-up from Powell and just what the earnings were. I think a lot of people are going to digest it, and the simple fact was they broke some historical precedents. You're seeing the daily active or the monthly active users kind of fluctuate, and then now Facebook today, this is their first time ever in history reporting a year-over-year decline in revenue. Pretty much by last July, they've never made lower than the 1 year prior, which is pretty amazing if you think about it, but that is going to have an effect. I can't wait to see what analysts are saying, and then if we see anything else, the conference call so far after hours has not really produced anything, so keep your eyes on that. That's number one. Number two, Microsoft. If we do get a rally, if the rest of the earnings are good, no negative GDP surprise, I really think Microsoft would be a good one if we get bull action. It's still up on the earnings. They have guided up good again. We saw what happened with Tesla and all that, and then now finally after the earnings, all the premiums are a lot cheaper. I really, really like that. I'm holding my other ones post-earnings. They're down 50%, but like I'm saying, this is why I like them. If I could get closer to the money with more time and we could confirm some upside, I think that one's going to be a good one. But there is that. And then finally, number three, don't go crazy with this one, TLT. So direction is hard. I'm not trying to say it's going to go up or down. That was the only confusing thing about today, is that the bond market was really weird. Besides the yield curve steepening, that was bullish, but the 10-year was a little bit tricky early on. So I don't have a direction, but why I'm bringing this up is simply I feel like there's another move. The market's moved. A lot of other things have moved with the Fed futures and all that. Even the dollar got killed today. But essentially, I think after we get some of that data or any other data, I think you're going to see that move with the bonds. I just don't think they made their real move yet, because that was the one that was a little tricky to grab a handle on it today. So we will see. But that is the third play. As far as everything else, I made a Visa call in the morning. I know it was before the news. It actually went up 100%. I grabbed a next week 225 call because literally Visa killed it. They opened down negative even though they absolutely did amazing. And all of these $1.20 calls, they were going for like 20 and 50 cents. So I grabbed one for 50 cents, that 222 or that 225, and it went up. And then pretty much after the news, it got clapped. But keep your eyes out for that. And even then, in relation to, I think that's the only other play I made. I grabbed a TTD 65 call for 38, and then I sold those TAM plays for about 40%. If you remember, they had a little bit less of time. But what I'm trying to say here with the Visa news and all that, be on the lookout. Some people were talking about PayPal benefiting off of it, Affirm and Square. Pretty much credit card companies may get hurt, but if they've any company that facilitates smaller businesses and has lower fees, they could be a benefactor of any legislation. So keep all of that in mind. But those were the main ones. Still watching out for oil and everything else, and really just watching the data now, seeing where the market is at, seeing if we get more volume now with all of this. But let's ride it to the end of the week. We have event after event after event, so it's not over yet, and I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, man, nobody trying to pull you over. The reason why you are going after positivity, self-development, anything of that nature is to get better and the benefits of the discipline it offers. I'm just saying, if you fall short, you make a mistake, brush it off. It's easy to be your own worst critic, and don't attack yourself. Nobody's watching you. Stop being so defensive about it and ride with it and understand why you started doing it in the first place, baby. But I love you. I'll see you in the morning. Abdul says hi. My girlfriend said, everybody says hi. Powell is hi. And that's it. Okay, I love you. I'll see you in the morning. Goodbye, Chad. God bless you.